Alrighty, so I'm gonna go over some examples of kind of how you can use a higher time frame bias to kind of structure your session you trade. So I normally trade the New York session, and yeah, I normally trade the New York session, and ultimately I try and find a bias beforehand to obviously trade. Sometimes there's a good daily bias on higher time frames. Sometimes there's better and clear biases on lower time frames. Like sometimes I'll just check the hourly and it's very clear there, whereas I look at the daily or the 12-hour and there's nothing really there. So really quickly, I'm just going to start. This is all hindsight stuff, so you obviously know what happens, but I mean, you have to kind of build off some sort of like showcase, something like that. Let's give a good example to each. So 12-hour, you can see that there's an imbalance right here, this purple box, taps this candle, and where does it go? Goes inside here, and then it obviously pushes bullish. Then it comes back. What happens? Taps into this candle right here, and there's your daily bias again. On the initial move down right here, it needed a reaction point, which for me would be this. And I will extend that up here. And so when we see something, there's two ways to kind of look at this. We're obviously going into a bullish market, so we expect things to continue higher. And it doesn't necessarily mean that it's got to come back to every zone like this, because that's obviously we'd love to see that trends are like that. But there's a lot of times that in this example is like, we'll tap into this area right here, and then we won't come back to areas like this. And I mean, like, it's pretty clear. We'll just continue up. Doesn't mean we don't tap zones. It just means it's not always clear cut that it's gonna always come back down to the first zone down here, or this zone, or this zone, or this zone, or this zone. Here it happened too, but like down here you're like, where does it go? Nothing will move perfectly, but this is also long term, so it's not like you're entering a 1 minute position here and holding it all the way. I mean, but yeah, I mean, like if you see something like this zone, obviously we're in a bullish market, but there are gonna be probably a few days that we react to here and come down. But then you can see another example is this zone to sell off of. Sure, we see a little candle rejection here with this daily. We push up into the daily and close down here, and then ultimately we just push through it and gap up the next day. But that doesn't mean, like, if we go back here, I'm sure you could have gotten like some 15-minute shorts or something like that. Okay, we're in this zone. You go on the probably 5-minute will look a little better, or 10-minute to be honest. Yeah, we'll use that for, we'll use the 15-minute just for the zone. But we push into the zone, we have some sort of like high volume, it comes back into this. I probably would not have actually had any shorts here. When is this? March. We can go on the 1 minute and see, or maybe the 2-minute all the way back there. No, I don't think we can. Anyways, well, it sucks that we can't kind of go back here, but let's just see really quick if we can. Oh, there we can. So my 2-minute zone would most likely be something like up here. If you've seen any of my other videos, this is a valid entry right here, because ultimately this is kind of like we're tapping into a zone here, we're pushing up through it, but instead the problem is we can't close above it, and so the candle would be either right after this close, or you can take the break of the low, sort of like that, and you expect lower prices, and then you target some sort of zone down here. Let's target right here, some sort of opposing zone, and so the opposing zone would be right here, and you can see instead of it going down to here, it wicks right through it, and we go right here to this candle. And so you could have actually made a little chunk of changes. It's a pretty hard trade to kind of get into, but I mean, you're looking at the 2-minute, we're seeing bullish. We push through, we come back, tap into this, we push up higher, and then we kind of form this like short-term pushback. Like this is the retracement, and then it comes up into something here and then falls down. If we had a 1 minute, we could probably look at it better, but it's like higher time frame bearishness. At least like a higher time frame is temporary bearish, so we could expect some bearish move, and then we break, break a low here, break the zone here with a wick to show some bearish intent. 15-minute zone would be this candle, and if I could go on a 1 minute I would, but I can't because it's too old a price. We push up, come back into a zone. I'm trying to see this bullish idea get broken, and the minute that candle wicks the high and is unable to close on that 2-minute candle, you can either sell stop the low, or you can just take it on the close with a much tighter stop. But keep in mind, this isn't guaranteed. Like, this is a pretty small stop loss. A more, I guess, a better approach that you're not going to get tagged out of trades too much is taking the breakdown, because it shows that the next candle then actually broke the low on a lower time frame, like probably 10-second. It broke kind of a structure, like this candle is a bullish move up here, and then then it closes down here, and then the next candle opens here and then breaks. So it's like a kind of like a break like that. But you could just take it like this if you want. You just risk less. Good luck holding a 20-hour trade basically like that. I doubt you'd be able to emotionally, but if you can, kudos to you. This TP makes sense. It's the first place of rejection. The bottom one actually ultimately gets hit. Shove, come back. Where does it come back to? This candle right here, the zone. Stuff definitely works. It's just implementing it. And you're basically trading in an crazy bullish market, and you're shorting. And so for this day, it would have been pretty good. And if like to take shorts, I mean, like if you're also in this zone, you'd be buying, and where do you stop and take profit? You'd probably take profit up here if you're taking like swing positions and stuff like that. So there's one example right there. Pushes up, comes back. Again, you could either look to go short immediately on this 12-hour, or you can wait till the next day and you see a doji, either 3 a.m. So this is basically the the daily candle open right there. You go on the daily. And there you go. Taps into the zone. You see the 12-hour candle close, sort of bearish, sort of rejection. You can replay there. Is there a 15-minute higher time frame? There may not be. Yeah, but you can mark this candle at top, taps into your zone, your bullish zone. Push up, come back, retracement, push up, come back, retracement. I'd be looking really quickly to see how price reacts at this zone right here and this one right here. You can see it ultimately takes out the low right here, showing some intent to go down. Mark out this zone right here. Let's change the color really quickly. Right there, and then you can mark out these wicks, because these wicks on a lower time frame, if you think about it, and you understand how candle moves, that candle pushed down to right here and then closed up. The next candle shot up for the next thing, and so this is basically a pullback on a lower time frame. I mean, if we can go on a 5-minute, you'll probably see. Yeah. I don't know if there's a lower time frame right there. If we make even a lower time frame, you can see the 2-minute zone that's right there. And then if the same example that I had before, we look here, the zone would be this candle, which did end up getting tapped right there. So I would look for a break to go lower, or again, a failure. You follow here in the zone right here. No imbalances, so there's no sells to take yet. First break is right here, comes back, there's no zone, pushes up higher, again, same exact thing as before, takes out the high with a wick, shows a rejection, it's a good candle, pushes down. If you didn't take this initial entry on the sell stop like this, you could then take the entry on a pullback into this candle right here and protect the high. So it's a decently hard entry to kind of get into. This is like emotionally kind of difficult because there is the zone above here, but at worst case, I'd look here and take profit, and then if that holds, comes back, and then you can go for the low. Oops. You can just aim for the low here, and then most likely you're going to be out of the trade right there anyways. So there it is. I mean, there's 2 different entries you could have. They're more on the riskier side because this first trade, it's only a small candle, but there's RR to be made, 1 to 5 right there, and pretty sure it's going to be about 1 to 5 on the next trade anyways. That's your bias short term for the day. If you held it, and there you go, there's $1 million for you. Push down, come back, comes back into this zone. Rarely do I ever look to re-enter off a zone like this. Like, sure, it taps in again, and then goes lower. It respects this, and then does whatever it does on after hours, and then taps, goes up here, 5 minute. Probably look better on a 15. There you go. There's your 15 minute right here. Basically the pullback, taps in, and then you could have got a short here, potentially at the original spot here, and your next short would be here or all the way up top there, and then sell it down to like a 2 minute. Let's kind of see what happened there. Tap in, and then it's a lot of price. So this is kind of a harder approach. First entry, if you're very risky, would be here, because the first buy zone that got invalidated is right here. We see it push in and then rejects up top, meaning this zone is not seeing the follow through. If you were bullish, you're not seeing that follow through of a candle close above, and then ultimately it breaks this low with a candle close. If you're going to take profit, first area to at least take profit would be there. You can get another push down if you didn't take this trade, another breakdown, good trade here. You see it does come back, so I mean, if you took profit here, it's probably a break even if you didn't take full partial. Yeah, when I'm taking these kind of trades, sure, there's lower zones like this and this, but I'm trying to get into that kind of initial first zone or second zone move, and that's it. You could take something up here. It's a little on the riskier side because I like to see a tap in the zone here and then a flush to actually like kind of validate what I'm thinking. And sure, it does eventually do that, but you can't exactly tell the future like that. If you were to mark it out on the 5 minute, right here, it does come into the 5 minute, which honestly is not too bad of a trade, but that looks like a news candle or something like that. Or is that the open? No, it's definitely like news. 5 minute tap in, another 5 minute tap in. I most likely would not have taken this trade ever. This one I probably would have missed, to be honest. And then your take profit would be here, or ultimately just lower. Like, you just aim for zones like probably this 5 minute right here. Yeah, there's a reaction. Like 5 minute there, you can aim for that 5 minute right there. Aim for like 5 minute, 5, 10 minute, 15 minute. It doesn't really matter. And if you hold runners, good for you because it really just dropped. Yeah, let's go over some more. Let's go on the 12 hour to kind of understand some other stuff. Sure, let's take a look. Again, there's this buy zone. We're trying to keep bullishness in mind because these again, if you remember what I said earlier, like it doesn't need, it can just do that and continue. It doesn't need to come all the way down to these zones just because you draw a box around them. That's not how that shit works. But when it does, you have pretty accurate days of just buy. Like, it's as simple as that. Let's go on the 1 hour really quickly. So comes into that zone that you were talking about. Again, the big thing about like my higher time frame bias, I don't care about wicks, meaning if I have a zone like something like that and it's like a 1 hour or above and we see a candle drop in here and then we see it wick the low of the zone and then go up, then I'm still willing to take that idea. But when I'm looking to enter on the 5 minute or the 1 minute or the 2 minute, I don't like seeing that. I will not trade it unless it's that model of it wicks the high, and then I'll take a buy stop or a sell stop, depending on that. And I like to mark bigger zones for higher time frames because this is the 2 hour zone. You can't have your whole day messed up just because you're refining, like overly refining too much. Okay, 4 hour. Let's go to an 8 hour. Let's see. Okay, 8 hour worked. Like, obviously hindsight, but in real time, I'll be looking at sort of the bigger zones. If you look on the 12 hour, ultimately I probably would have taken the 12 hour. But you can see the 8 hour also worked. And so it's kind of like, you can miss stuff because you're overdoing it. Yeah, that's pretty much it. And then let's go on like a 1 hour and just kind of see what day is this. So Friday, we see market open. We tapped into the zone. We see market open for me at 6:30. So probably around here. And then we could just see 5 minutes play price. I want to say 15 minutes seems to be better. So for this, yeah, like I'll be looking for bullishness, but we're already at this point. It's so late in the day. It's gonna be kind of hard to. I mean, there could have been a short here. If we go on a 5 minute, it probably will look a little bit better because that looks absolutely atrocious, to be honest. If I did take this short, I would have taken it short all the way right here. And I don't even think there would have been an entry. No, definitely no entry here. This is just like one of those rangy days. It is what it is. While the higher time frame zone looks amazing, you want to take that. Most likely didn't get the follow through that we wanted in the session that we were trading. And then you see market open the next day at 6:30, and we basically missed the move in London, which is what happens sometimes. 12 hour. Again, you can take these sell zones to go short, but you risk the chance of just missing everything because basically you're just not paying attention. Really quickly, market open. Big thing about market open, I won't take zones that were made in the first like 15 minutes usually. So you might see, okay, we tapped in and we broke all the way down. Why didn't you take a sell here? You could have. But I don't like taking the zones in the first 15 to 30 minutes of the day. So yeah, like you could have. This is definitely valid, but I'm trying to get into it a little earlier. Like the ideal thing is not a shot up and then all the way and then come back. It's more something like this, and then we kind of see like them fall off of momentum. We get it either here or over there or up top there. Whoa. So really quickly, this is the best example I can see. We're in a higher time frame bearish zone. We tap in and we don't see that follow through lower. Like if we call this support and resistance, whatever you want to call it, but we don't see the follow through lower, and then we see this kind of wick rejection and then a push lower. So immediately this is a low, like an intermediary break of like structure. We're seeing kind of like what I drew. Again, we're seeing this price, and then we're seeing it kind of like fold over. And so now we're seeing this. And so in a market that's super bullish, or that was super bullish, and then we start seeing this, it's kind of like momentum slowing off, and it's slowing off in an area that we think it's going to go lower in. So depending on how you want to enter, you can enter top zone, break, take this zone right here, or you could take the sell stop of this because it's a doji. It's a pretty good rejection candle. This is enough confluence to take this thing lower. First TP would either be here, if you did take profit, and then you could probably just like aim for a higher time frame, like a 5 or 15 minute. I probably aim, honestly, there's really nothing. It's probably just gonna fall. But we could see probably at this point, it's not so much targeting zones. It's more just how much money you're up and what you're willing to risk to continue seeing it lower. Because we're gonna have days where it just shoots up, and there's days that it'll just shoot down. Maybe it's in your best interest to just leave it and then just close it at the end of your session. That's up to you. I'm not gonna give examples because everything works sometimes, right? So sure, you could have taken this entry. It's a little riskier because you have this top zone. There's no guarantees that it's going to not tap into this one versus this one. You're just running the risk of taking an extra loss, but it's up to you if you want to take the extra loss to potentially miss the move or not miss the move. For me, I would rather take the extra loss because I'm not risking a lot and my targets make sense and ultimately a little profitable. Again, like I said, aim for this next zone to sell off of, and if you remember earlier, these buy and sell wicks, So again, it's this candle pushed down here and then closed like this, and then this candle opened up right here and then pushed up and then came down. And so that's a lower like time frame pullback. I will never take these ever in these situations where there's two zones super close to each other, unless I take like basically this, I see this candle, black candle print, and I'm like doing something like this to continue on the trend, and the RR makes sense down here, or even something like that. Like I'll go for a 1 to 2. It's not a big deal. Like I will take this trade. It's not a crazy thing, but I will not take it off the initial rejection. I want to see a big volume candle, and a lot of times we'll get a candle like this right after, and I'm not going to take that for simple reasons that like this candle, sure, there's enough money to be made down here, but if you take a candle the size of like this and then we plot it where my entry is, it's a little crazy. I would basically be aiming for almost a 1 to 1, which again could still be profitable, but I'd rather risk it where it makes a little bit more sense. So it would have sold here, and then you'd be looking again to sell up here, but it doesn't come back to there, which is fine. That's just kind of what it happens. And these first 2 entries, ideal. This third one is a little sus. Not something I want to put money on, because like it's not gonna just fall forever. So yeah, there's that good lower time frame, and then again, we're also taking buys in this extremely bullish market, and you're probably like, what the hell are you guys doing? It's because the higher time frame zones usually warrant some sort of like rejection before it just continues off. And so if you think about it in some way, it's like a lot of times these will act as a thing that creates the pullback back down before the push through. Doesn't happen always. Sometimes you won't even see it reject, and it will just push right through and there's no rejection. But what's most likely happening, I don't know, is it's gonna pull back down to here to some zone to buy through, and it's just gonna continue through it. And let's just see honestly like what it comes back to. And so there's the tap in that zone, and it comes back, and then it taps into a 4 hour to continue higher. I mean, we can make it look a little bit better because that zone, yeah. 6 hour ultimately looks the best. That's the lowest one. It's the one with the imbalance. I would take this zone over the 4 hour, just personal preference. But I mean, you can see firsthand that's all it was doing. Yeah, I mean, like we also could have seen a rejection. Like again, if I didn't even plot this top zone, I would have probably had this right here for short term, and you see how it wicks through it. I'd still actually be looking short, because this kind of follows the idea that it's wicking through the zone, sure, but it closes bearish. You just look at the candle. It's a pretty good rejection candle as well. If this candle right here didn't exist, let's just pretend like this candle didn't exist, whatever. I'd still be looking short here on a lower time frame to see you follow through. Whether that's like a 1 minute, 2 minute, 5 minute, and then going short accordingly. Because this is still valid. It's, again, I'm not trading off the higher time frames. The lower time frames need to confirm this move anyway, so it's not like I'm taking losses like that. And then this is a big indicator we're going probably short. How short? I don't know. But my bias is at least down to the like 17,716 area. Or maybe we just take out these lows right here and then continue up. I don't tell the future, I just kind of react to what I see. Again, if you remember my lower time frame entries, this is another crazy rejection on a higher time frame. You can see this working, I believe, right here. Again, we just pulled back to probably something in here, like let's just go back. It's probably like a 1 hour zone or something like that. Push up, there's the wick that we just saw, it comes back down exactly to a 1 hour zone. There you go. But the minute this happens, push down, come back, 1 hour zone here, short. Push down, come back, probably a 2 hour zone, short. And we're going short, and then we're targeting, where do we target? This zone for first take profit, but it already got ran by the time I'm taking that. So then the next one will be here, and then you could just target even lower if it does. But keep in mind, you're counter trending against the higher time frame. So maybe it's not the smartest. If you follow candles as well, you see this pushes lower. See the wick rejection, you might want to take profit here. Wick rejection underneath this low. Again, you could take profit accordingly. Big thing I think is we're just gonna fall down to here. If I were to immediately give you a bias, we're gonna just fall. This bullish zone did get respected initially, like it is still being respected, so it's not like I'm completely bearish, but I'm way more on the bearish side. Wicks the high, comes back to the bullish zone, gives some sort of rejection, but immediately I'd want the follow through right there. You can see how it's kind of like going sideways and you're not really understanding what's happening. We go on a lower time frame and it's respecting this 4-hour zone more than it's respecting the bullish zones. And so we come back, daily zone is over here. We should have pushed up, came back right here, gone through this, maybe a little pullback here like this to then go through, but we're really fucking around in a daily zone after this showed us bearishness, and then all this bearishness, all these zones are getting taken out right here. It's not seeing follow through from here. See, it just wicked, rejected, come down. It's not seeing some sort of pullback to continue higher. Again, 4-hour, and we saw immediately down. And so what this is most likely going to be is it's going to be like looking here at Monday morning, or honestly like either that area right here on the 4-hour or something a little higher. It may not even reach up here. It might just flush and go even lower. But I'm looking bearish and extremely bearish right here and right here. And we'll confirm that on the lower time frames. Yeah, these are just two areas. If we end up coming to the very top here, I'm not taking shorts just from experience. Most of the time we don't come back to the top, especially in these kind of moves. Like it's pretty rare, but I guess you could look up there. I don't think we're going to see that much movement Monday morning. And if we do, it's going to be an interesting moment. Definitely one for the books. But yeah, you're going to see a little bullishness in here. Look for rejection Monday morning. Yeah, you can see like this shit works. It's not like I'm just making this stuff up. We can see that the 15-minute did come into this area, so there is a chance that it just runs through it. But again, I don't just trade off of boxes. I will confirm it with a lower time frame, basically. And another more confluence, it's coming down, and it's not respecting this to go bullish, not respecting this to go bullish, respecting this, but again, in the way it is this consolidation here. Not a fan of it, realistically. But sure, maybe it goes up like that. Can't tell you. If it does, well, my bias will be wrong, and this zone won't get hit. But maybe it will, maybe it won't. Anyways, that's pretty much it. That's kind of how I find my daily bias. Whether I follow it is definitely a different story, because sometimes I'm trading counter trend almost the whole day because I can't find good entries pro trend. And yeah, that's about it. Again, really quickly, this is a 4-hour zone. Wick through, push up, wick through, push up. It did not close beneath my 4-hour zone. So yes, you can take longs here. It's completely valid. I do not like taking entries like this on lower time frames, 5-minute and lower. I won't do it. 15 minutes sometimes, but most of the time I will confirm a 15-minute zone with a 1-minute entry or a 30-second entry or a 15-second entry. So I guess that kind of just depends on what I'm feeling for the day. But yeah, that's it. Thank you.